On Wednesday, it was reported that Snowflake's new CEO bought $5 million worth of shares, the amount here 31,542 shares, for a price of $158.52. The shares are held by a trust, which the reporting person, in this case the CEO, is a trustee, and this includes shares to be issued in connection with the vesting of one or more restricted stock units, or RSU. Now already someone on X has reported that according to the CEO employment letter, he was required to buy $5 million of stock to get his 5 million RSU grant. Not quite the signal you think. Well, in my opinion, it is quite a signal still because, well, he could have just said no, but he still exercised that option. Now, I might say it's just 5 million. $5 million is still $5 million. Now, if he's buying, should you be buying? Let's have a look at the state of Snowflake in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So currently this is the state of Snowflake. At the time of making this video, the stock is actually up close to 3% before the market opens. Market cap of around $55 billion. Now, if you look at valuation, it is extremely expensive, right? It is extremely expensive, but it is the cheapest you're going to get it, well, since forever. If you look at forward PE, 167.7 times, EV to EBITDA 142.6 times. If you look at the mean, in this case, the 4-year mean, or for the PE for not so long, 2-year mean, it is much lower. Price to sales, 15.4 times for a software company like that, which is still growing quite fast despite the weak-ish guidance. 15.4 times is not the most expensive out there. As for price to free cash flow, that's in the last 12-month metric, 64.8 times compared to 123.9 times. Now, of course, we know we've been following Snowflake, we've been following Palantir for quite a while. The big story has always been, oh, SBC is super high, SBC is super high. Well, for Palantir, SBC compared to revenue has come down quite dramatically. For Snowflake, as you can see here in the last couple of years, shares outstanding has gone up 20.7%. Of course, it has gone up quite a lot in the first year or two that it went public. Since then, in the last year or so, shares outstanding have gone up 3.84%. Definitely an orange flag. Then if we look at what the analysts are expecting for the company in the coming fiscal years, you can see that growth is still quite remarkable top and bottom line. Just this year, fiscal year 2024, EPS will decline 2.59% year over year. But after that, you should expect around 35% year over year growth with regards to EPS and around 23% growth year over year with regards to sales. So again, this is a fast growing company. Yes, you're paying quite a big premium, but on the flip side, it was never this cheap or this less expensive, should I say. The current average analyst price target still sits at $207, representing close to 30% upside from the price we're at today. Now, going back to the latest earnings report, what was the issue there? The quarter was a strong quarter, right? Company is still growing quite fast. The problem here again was one, CEO is stepping down, new CEO, always market doesn't like uncertainty, fine. Second of all, guidance. Guidance was not as good as expected. They're launching new products. They're not taking into consideration the impact, positive or negative impact of those new products. And so this is what guidance looks like. Still quite okay, right? For the first quarter of fiscal 2025, between 26 to 27% year over year product growth. Then if you look at fiscal year 2025, overall product revenue, 22% year over year growth, with product gross profit at a 76% margin. That's a non-GAAP guidance. And as I've discussed before, I think that this guidance was given because there's a new CEO coming in and they want to see him succeed. This was reaffirmed by the CFO's comment in a Morgan Stanley Technology, Media and Telecom conference back a couple of weeks ago. So with regards to guidance, is there some conservatism in that? He talks here about the CEO transition. Last year was a rough year. We are hoping from a consumption standpoint, we'd see consumer returns to consumption patterns pre-2024. As a reminder, we're in fiscal 2025 right now, and we didn't see that. So yes, consumption trends are good right now, but with the new CEO coming on board, we have so many new products coming to GA that we're not going to forecast those until we start seeing a history of consumption. So I do think that there is, call it conservatism, I call it prudent guidance, and we'll take it one quarter at a time. We would really like to see the new CEO succeed. Point and case. Of course, the company still has to execute, so it remains to be seen if next quarter the bar gets raised already, or it's only going to happen into the second half of this year. More recently, during the Nvidia GTC event, they had a couple of announcements that they made. One is Snowflake teams with Nvidia to deliver full stack AI platform for customers to transform their industries. A couple of comments here from both CEOs. Data is the fuel of AI, making it essential to establish an effective AI strategy. Our partnership with Nvidia is delivering a secure, scalable, and easy-to-use platform for trusted enterprise data. And we take the complexity out of AI, empowering users of all types, regardless of their technical expertise, to quickly and easily realize the benefits of AI. I've heard this context from another company as well. As for Jensen Huang, enterprise data is the foundation for custom AI applications that can generate intelligence and reveal new insights. Bring NVIDIA accelerated computing and software to Snowflake's data platform can turbocharge enterprise AI adoption by helping customers build, deploy, and manage secure generative AI applications. This could lead to a reacceleration of product revenue for Snowflake. And so, looking at the graph right now, of course, we've seen the huge red candles after the company reported the latest earnings report and guidance new CEO. This is on the weekly. The stock seemed to have bottomed-ish at around $160 or so. We are making higher lows since June 2022. Could still go lower a little bit. It still has some space here to go to around 145. I'm not saying it goes. I don't have a crystal ball, but usually it did touch that, let's say, higher lows trend line. As for RSI, is low-ish, it's around 40, not oversold, it's neutral. Looking at the daily, in the last couple of days, we have gone out of the oversold area, which was basically since the drop under 160 all the way back to $152. Then late last week, we made our way back above $160, which is why you're seeing RSI being very close to being oversold, but not oversold officially anymore. So overall, to conclude, new CEO buys 5 million worth of shares. Again, you could take this as an excellent signal, a signal that he believes in the company, or you can take it as a signal, oh, okay, he exercised his options. Great, congrats, he's a new CEO. 5 million is not that much. To me, nothing has changed. I still want to see reacceleration of revenue for this company in the coming quarters. That's also completely fine. Just wanted to point out the facts here. You do you, and let me know, of course, your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.